I'm joined on the sofas today by Stuart Haigh, who is one of the directors of Whitley Stimpson, to talk about something that, to most accountants, of course, is a fairly fundamental thing. It is the thing that most accountants are famous for, the production of a set of accounts, the financial statements, whatever you may want to call them, basically the numbers of a business. And most people are fairly familiar with the sort of look that they will have. There'll be some numbers on a page, they'll take some away from some others, and we end up with a variety of figures. But actually, simply having the bit of paper is no use at all unless we understand them. So, first of all, Stuart, welcome to the studio.
Thank you.
Let's start with the first point. There are two bits of paper that are fundamental: P&L and balance sheet.
Yeah.
What is a profit and loss account? Let's start there.
Right, as you sort of alluded to, for most accountants this is fairly straightforward, but to be perfectly honest, you will have certain other people in professions such as lawyers, bank managers, and people who are looking to probably buy a business where they don't know the actual basics of a profit and loss account or a balance sheet. Profit and loss account is really a précis of a certain period, and it tells you how did we do, what profit did we make, what were our major sources of income, and also what did we spend our well-earned money on. A lot of this is very, very straightforward, but it is very important sometimes, I think, to actually just not look in isolation at one income and expenditure account, profit and loss account. You sometimes need to look at a previous year, but sometimes the year before that, so you can get a trend and see exactly how profitable the company has been recently and in the past.
So the point you're making there is, I mean, a very well-known expression in life, of course, is bottom line. And a lot of people look at the accounts and say, well, bottom line is this figure, that's got to be good. But of course, we need to look around that figure.
Yeah, I've had a lot of clients over the years which will say, oh, I've got a business turning over £4 million. And as you and me know, that's not really that important. It's what you have at the bottom that's the important thing. So yeah.
And I think that, as you say, looking at the trend in the industry as well, perhaps might be something that people have to do as to how businesses are doing.
It's a very good point. You could look at other sets of accounts for businesses who do a similar type of trade. All sorts of retail outlets, for example, public houses, for example. But yes, it does give you a good guide on how that specific company is actually doing.
Okay,
yeah.
And so we've got that first bit of paper, that profit and loss account.
Yeah.
And we should say straight away, you know, there might be directors' reports, audit reports, all sorts of things. Not talking about them today. We're just looking at those two fundamentals.
Yeah.
Profit and loss account is a period of time, and it presumably, I mean, it could be a month, it could be.
Yes, I mean, you will have a lot of businesses, quite large businesses, will have a monthly set of management accounts. And that is very important, especially when you've got a company that might have seasonal fluctuations, for example. So some may depend on weather, for example. The old ice cream salesman might have a bit of a problem. But it is worth looking at different periods, month, 3 months, 6 months. Usually where we get involved, we look at a 12-month period. Okay. And that's where I'm going to really look at today.
And so we've got a 12-month set of, a 12-month profit and loss, which is looking at everything that's happened in terms of what we've earned and what we've spent money on in that 12-month period.
That's a very good point, actually, is what we've earned, not what we've received. Some people will look at their bank account and say, well, I've received £300,000 this year, why is my income £400,000, for example? And what we do is we actually use that figure as income, what they've actually earned rather than what they've actually received. So there'll be certain amounts at the end of the year that will actually be outstanding, which we've got to include in as income. Additionally, people may ask about VAT. That figure that we have in the profit and loss account doesn't include VAT. Okay. So it is strictly just what we've earned during that year.
Okay, and so the example there would be, so quite recently I got a good discount because I bought a subscription for 2 years for something rather than just 1 year. Uh-huh. So that company I've paid the subscription money to, only half would be earned in this year. Yeah. And they'd have to put the other half in the other year.
That's correct. We will have income that we've actually received, but we haven't yet earned it. So we may have to defer that to the following year. So like I say, in essence, it is, strictly speaking, for that period, exactly what we have earned.
Okay, and so we've got the full year of information in the P&L. Do we have a full year of information in a balance sheet? Or is that a different thing altogether?
No, the balance sheet is completely different. That is an accumulation over the years, really, of the value of the company as far as its basic assets are concerned, and its liabilities as well.
Okay,
so it's an accumulation.
So that's a sort of one moment. So when it says 31st of December on a profit and loss, that would be the year up to 31st December, but on a balance sheet it's just
one specific date. Yes, that's correct.
Okay,
yeah.
And so where would we use a balance sheet? Why is that useful to know?
A lot of people will look at balance sheets sometimes before they look at a profit and loss account, because it will actually show the value of that company. There's a lot of different things in a balance sheet that will suggest performance of that company. How well do they collect their debts, for example? How quickly do they pay their bills? What are their accumulated retained earnings? What dividends do they pay? There's a lot of different things that a balance sheet at any particular point in time will actually show an individual.
Okay, and does it need well, perhaps that's what we're about to do. Does it require an accountant to explain a balance sheet, or should people be able to pick out a few key things themselves?
It depends on the expertise of the individual, but I think you'd always need an accountant to help you out with something like that, to be honest.
Okay, well, let's see it. Let's put that to the test. We're going to put some numbers up on the screen now, and we're going to work through them. First of all, we're going to have a look at the profit and loss account. And Stuart, as we look at this profit and loss account, though, those first few numbers, there don't seem to be as many numbers as I would really hope for.
You're correct, Giles, but this is just a summary of the profit and loss for the actual year. If we do look at these figures in more detail, as you can see on the right-hand side, the summary starting with a turnover figure of 4.5 million, cost of sales below that of 2.9, it shows a gross profit of 1.6 million. You then look to the left-hand side to see a comparison, which is in 2015 in this case. Income has gone up from 4.5 up to £8 million, which suggests a very good year in 2015. Additionally, the cost of sales has gone up from 2.9 to 5.2, resulting in a gross profit in 2015 of 2.7, nearly 2.8 million, as opposed to 1.66 million.
Okay, so the obvious first comment is they're doing great.
Yes, they are doing very well, and a little item to look at here is their actual gross profit percentage. When we look at 2014, the gross profit is roughly 35%, which is very, very good.
And that's taking the 1.6 million and dividing it by the 4.5 million.
Correct. Then you go to 2015, divide the 2.7, 2.8 between £8 million, and this has actually gone down slightly, but only by 1%. Now, looking at this in its entirety, we've got the two gross profit figures, which are roughly the same. This is slightly unusual because you would sometimes expect in the following year, if the gross profit is the same, for the turnover to be the same. This is very good. The turnover has increased and has kept the same gross profit as it did in the previous year, where the income was only £4.5 million. So this is a very good indicator.
Okay, and because sometimes you might have to incur a lot more costs in order to have pushed up your turnover that much. Yes. You might have incurred a lot of cost to get there. The good news for this business is that actually they've been able to keep spending about the same per pound of sale. That's the point you're making, isn't it?
That's correct. And then when you look down at the next line, the administrative expenses, as you can see, this has gone up from 748,000 to 967,000. Now, this is not unusual. It would probably be expected that admin expenses would go up, but we'll look at that in more detail in a minute or two.
Okay, so that actually allows me just to ask a quick question. So obviously cost of sales and administrative expenses, how do we decide what is a cost of sale and how do we decide what is an administrative expense?
Good question. Cost of sales are usually directly related to the turnover. That is, if turnover increases, the cost of sale will increase. For example, if you were building a house, for example, all the bricks and mortar and direct labour would be your cost of sale. So that is separated out from the administrative expenses, which a lot of them will be fixed expenses. Some of them will be slightly variable, such as wages, direct wages and the likes, but cost of sales is directly related to your turnover in the year.
Okay, so if I am a builder, then as well as my bricks and things like that being in cost of sales, presumably the wages of the builders would be in cost of sales.
Yeah, the subcontracting labour would be in there, but then again the administrative labour would not be included.
So the receptionist at head office will be in administrative expenses, but the cost of the person who actually does the bricks and mortar will be on cost of sales.
That's correct.
Okay, that makes sense. And then that then gives us this operating profit. So gross profit is just what it's cost me to make something or to do something,
Yeah.
and then the money I got from that, I then deduct everything else, and that's an operating profit.
Yeah, as you can see, the comparison in the 2 years from £917,000 operating profit to an increase of nearly 100%, 97%, up to 1.8 million is fantastic, actually. You've kept the gross profit, as we've talked before, but we have increased the operating profit considerably.
Okay.
By controlling really the admin expenses as well.
Fantastic. And then further down there, obviously we have this other interest receivable, things like that. That's just things that don't relate to our trade, I guess, but have to be included somewhere. Yep. And then at that point, of course, I'm hoping I can take out 1.8 million to spend on myself. But
Yes.
Actually, I've got to pay that tax bill first, leaving me with a slightly less exciting profit, but still a very good year for them.
It is. I mean, unfortunately, tax has to be made on this profit that this company has made. The tax rate in these specific years was 20%, although the actual tax on the activity is not exactly 20% because we do have to make some adjustments. It is not a million miles away, but what you are left at the end of the year in 2014 was £721,000 to distribute to shareholders, if you wish, and then compare that to 2015, where we have a profit of £1.4 million. This has certainly been a very good year for this business.
I think somebody somewhere has earned a bonus, which, as we've already said, might appear in administrative expenses.
Yes.
And we should mention the note. We're not going to talk about notes to accounts today, but with a set of accounts, you often get this backup information.
You do. I mean, there'll be certain notes that are mentioned there. There'll be more specific breakdown of what that operating profit entails.
Okay. And then within the administrative expenses, then, we can see this £967,000.
Yeah.
Presumably, if I'm the owner of a business, I might be quite keen to know, well, why has it gone up by £220,000? So what page would we then...
So then we go on to the next page, which will give us an actual analysis of all of the admin expenses that have been incurred in both of the years.
Okay, and then straight away I can see that if my wages, my director's salary and the national insurance has gone up a little bit, then I suppose that makes sense that it's cost us a bit more.
Yes, that's correct. If we look at the total on the right-hand side for 2014, the total figure of £748,000 is now broken down into a lot more detail. And as you can see, the big figure that sticks out is obviously the wages and salaries. In 2014, £440,000, and in 2015, £587,000. Now, this is probably in line with what we would expect because of the increase in turnover. It may be that they may have had to acquire more office staff, hence the increase in wages and salaries. Additionally, as you alluded to earlier, somebody might have had a bonus for the great year that they've actually had. So looks as though the director's salaries increased by £15,000 as well, and the director's pension costs. So they're the main increases in the administrative costs in the year. The total amount of increase in the year is 220,000, and roughly about 180,000 of that can be explained in the wages and salaries and directors.
Okay,
salaries.
and then moving down, obviously, as we discussed, the head office costs, if you like, rent and rates, things like heating, lighting, insurance, etc., that all appears in here as well. What I think is, I was just looking through these figures myself, and the advertising is the one that I'm picking out, because I can see why they've had such a great year. They spent a lot more on advertising in 2014 than they did in 2015, and it's reaped the rewards of their extra sales, I guess. So this is the sort of detail you can pick through by looking through these figures.
Yes, you can do. I mean, another figure that I'd like to highlight is the accommodation and subsistence figure that has increased from 13,000 up to 33,000, so it's gone up 2.5-fold. Again, there'll be reasons behind this, maybe that there was work that had to be done further afield, and that meant that some people had to stay overnight in accommodation.
And so, although we've got two sets of figures here, taking accommodation and subsistence, also taking advertising as two good examples, it's actually quite hard to tell. I was going to say which of those figures is right. Let me change that. It's hard to tell which of those figures is likely to be the figure for the future. So what else might I want to look at rather than just 12,000 and 3,000 across 2 years? I guess other years?
Yes, as I mentioned earlier, you do need to look at trends, and the only way you can look at trends is to look at more than 1 year, more than 2 years. Some people will look up to 6 years going back to see trends. There may be certain reasons why the figure was high in 1 year and low in another. It depends on the type of business. Say, for example, if you were involved in the sporting industry, it may be 1 year. There was an Olympics there, for example, and therefore there may have been a lot more spent on advertising that particular year. So you've really got to look at the bigger picture sometimes. Just looking at figures can cloud the issue. You sometimes have to look at other areas as well.
Okay, and then and presumably internally within a business, I might also look at budgets and things like that to be able to compare what's happening with what I hope would happen.
You will have a lot of companies this size that will have a budget for the year, and we'll probably look at this and address these figures on a monthly basis. They will probably have management accounts, and the important thing when you do have management accounts and you compare them to a budget, you've obviously got to look at the variances that occur. And I'm sure a company this size would have such things in place.
Okay, and so so the profit we had was just under 1.5 million, 1.4 million, I think it was. Mm-hmm. And so, just trying to think about what you said before. So I have that profit in my hands, if you like, at the end of the year. So does that mean it would appear in my balance sheet, that 1.4 million?
No, not necessarily. So I think it'd be a good time now to actually go into the balance sheet and look at these figures. So if we do go into the balance sheet, as you can see, again, there's a comparative of 1 year to the next, 2014 to 2015. Now, if I could just bring you down to the bottom half of that balance sheet, you look at the figures on the bottom right-hand side, you have called up share capital of 42,500, and you have what's called a profit and loss account of £1.9 million. Now what this is, it is an accumulation of all of the profit that this company has made since inception. It's not necessarily what it is actually earned, because what will have been taken out of this accumulation of profit will almost certainly be dividends to the shareholders. So we look at those figures down the bottom left-hand corner, and then you look at the comparative to the left. So you see a figure of 1.969 million, and then the figure next to it of £2.422 million. If we go back to the P&L, we can see that there was a profit for the year, a retained profit of £1.453 million. We then look at the balance sheet, so you'd imagine the reserves down the bottom should have gone up by £1.45 million.
Yeah, but they've only gone up by about £500,000.
They've gone up by 0.453 of £1 million.
We've lost £1 million somewhere.
Yes, and I would probably think that has disappeared to the shareholders in the year. They've received a dividend, they've had a good year, and they have just had some retained profits left of £453,000, and this has been added to the value of the balance sheet and the retained profits for the year.
Because, of course, rather than drawing every penny out each year at the end of the year, we need to make sure there's enough money in there to keep the business running.
Correct.
And all that sort of thing.
There may be fixed assets that the MD and the finance director may be looking at to purchase. And you do not get a lot of companies that will just automatically draw all of their profit out as a dividend. They need to reinvest some of the retained profits into the business.
So fixed assets being things like plant and machinery, fixtures and fittings, things like that.
Yes, so if we do look at the fixed assets on these two balance sheets, as you can see on the top right-hand corner there have been tangible assets, as we call them, of £33,962. I'd imagine the tangible assets in a company like this will probably be motor vehicles, laptops, computers and the likes, fairly basic things. Then you look at the comparative to the 2015 balance sheet, and the assets have gone down by about £10,000. Now, the reason they have gone down by £10,000, part of the reason is almost certainly because of the depreciation that has occurred and is contained in the profit and loss account that we first looked at.
Okay.
And it will be shown in the administrative expenses.
Okay. And then we have the current assets I see as well. That's looking at the headings there. That seems to be the things that keep us ticking over in business.
Yeah, the current assets are the things that will really move every day. Your stock will move every day. Your debtors, the people that owe the company money, they will change every day, and obviously your cash in the bank will change every day. So these items really need to be looked at carefully when you also look at the creditors as well. This is a very important part of the balance sheet. This really is the crux of a balance sheet, and people like bank managers will look at this more than probably any other area of the financial statements. So if we do look at the total of current assets in 2014, which come to 3.3 million, and you take out the creditors that need to be paid, in theory, one take away the other. In theory, there is £1.9 million worth of a surplus in 2014, which is very good. But then you look at 2015, and the surplus has gone up even more, up to 2.4 million, which again would suggest a very good trend and a very, very solid balance sheet.
But of course, I guess it might be that I could make my balance sheet look a bit better by having loads and loads of stock bought on credit. But I guess if I did that, the stock figure would go up, but that creditors figure would go up as well.
Yeah, one figure will balance out another figure. So your current asset will go up and your current liability, your creditors, would go up correspondingly as well. One other point to mention here is your debtors, the money that is owed to the company. As you can see, in 2014, the amount owed to the company is £654,000. This figure has now gone up to £1.1 million. Again, this is not unusual when you've got a company that turnover has nigh on doubled in the year. Therefore, the actual money that is owed out has nearly doubled as well. There can be certain hidden parts in one particular figure, in a debtor's figure. It needs to be looked at more closely, because there might be a large amount of invoices that might have been sent out right at the end of October 15 in this case, that are outstanding, and that might artificially inflate your debtors, and it may look as though you're not collecting the debtors as quickly as you should do. So beyond the balance sheet, you do need to look into these figures a bit more.
Okay, so
detail.
The point there, I guess, is that if our balance sheet as at October the 31st shows debtors of £1.1 million, that might be fine because, as you say, we've got more sales, so you would expect, maybe it's on 30 days payment or something like that. That might be 30 days sales in 2014 and 2015, we're not sure. But of course, as well as that, if your main point of sales is in the build-up to Halloween, you would expect to have much more debtors at that time of year than later on, which would make sense here.
That's a very good point. And correspondingly, looking at the creditors have actually gone up more in proportion, more than the debtors as well. So it may be right at the end of the year, they may have had to buy a lot of witches' hats or whatever it was, and hence they owe that money out, but it will be still paid within the credit terms. So again, you need to look into these figures a bit more than just looking at it on the face of the balance sheet.
Okay, and then at the very bottom there, it also mentioned that they were prepared under a set standard. So all accounts will be prepared under a set of rules, so we can compare different companies, I guess?
Yes, correct. Every set of accounts has to adhere to all of the UK law. So yes, every set of accounts should be very comparable.
Okay,
Yeah.
and so I start off by saying there's two documents. In fact, I think we're finishing off by saying there's one document that goes into more detail, because that profit figure then appears in the balance sheet. It explains what we've done over the last 12 months,
Yes.
resulting in where we are now. That's
Yes,
the point.
there's a snapshot of the performance of a company in the profit and loss for usually a 12-month period. That is then fed into the balance sheet, and the balance sheet is an accumulation of the performance of that company since it was incorporated. So the balance sheet is a good indication of the wealth of the company as well.
Okay, and then a question that I'm asked frequently is, what do accountants actually do? So I think it's to explain that it's not just the production of this document at the end of the year. For some clients it will be, for some clients it will be here's all my books, can you now turn this into accounts? But for some it will be a hand-holding process through the year.
Yes, it can well be. And a set of accounts such as a balance sheet, for example, it's such an important piece of paper. You will get a lot of accountants will just blandly give the client a balance sheet, profit and loss, the financial statements, here you are, tick this box and sign it and send it back. You really need an accountant who can interpret these accounts in more detail, and that gives added value to the client. For example, trends, as we've mentioned before, certain ways in which we may be able to collect your money quicker. But there's a lot more to than that one important piece of paper, a balance sheet, that meets the eye, and that's where you need an accountant to go through it, interpret it correctly with you as well.
And I think a lot of people assume that it is purely historic use, but in fact a good set of accounts and a good accountant will tell you where you're going.
Yeah, they will initially tell you where you've come from, and more importantly they'll tell you where you would like to go and where they would like you to go probably as well.
Okay, brilliant. Stuart, thank you very much indeed.
Okay.
If you would like further information about accounts, how to deal with accounts, how to work with accounts, interpretation, etc., then contact Stuart and his colleagues via the website and the phone number on screen now.